Hey YouTube, back with another video. So I got some really good feedback on the last video that I did. So again, I'm going to try and keep this straight to the point, except this video is going to be a little bit more in depth about what I found out today. So someone in the comment section said, well, if it's 100x, then are you looking at Vchain getting to $2? And to be honest, I think that price prediction might be a little high, because then we'll be looking at around, well, I reckon around to $1.5. The market cap for Vchain would have to be around $66 billion. But if you think maybe if Bitcoin could get to several trillion dollars, then 66 billion doesn't seem to be too bad. But I did a bit more research into that today, and I found something very interesting, which I think you will be really interested in seeing. I think it'll have a massive impact in terms of how you think about how VeChain is going to be used and its economy, and why holding VET may have a significant impact in terms of how much you'll be earning in the future. So please wait till the end of the video. Before I start, again, this is not financial advice. This is my own opinion. I might be wrong. And if I am wrong, leave some comments in the comment section and maybe we can delve into it a little deeper. The second thing is that you may need to have a bit of an understanding about how VeChain works. And if you need to, find any information about that, there's a lot of videos on YouTube that can tell you how it works and how it operates with the actual real world. So I'm not going to be going into that in too much detail, and you probably need to understand how the economics of VeChain works before delving into this video to really understand what's going on. So before I get started, I just wanted to just go over this quickly. So circulating supply 55 billion and total supply is 86 billion, and current market cap we're looking at about $1 billion as we speak. If I move across to Vechain 4, which is basically the token that's used to power VET or the Vechain network. If you look, the price is 0.0016. The current circulating supply is 26 billion, and there's no cap on how much VTHO there's generated. There's limitless supply of VTHO, and that makes total sense for this ecosystem. So what I started to do is I started to do some research. I looked at some of the partners, and there's this good website where you can find a full list of partners that Vechain is currently partnered with. And as you can see, two of the biggest partners is DNVGL and PricewaterhouseCoopers. I believe some of those members are actually on the board, or the committee board for Vechain, and they are the two principal businesses that are really driving adoption of Vechain moving forwards. And as you can see, they have a huge amount of partners in this list, and some of them are of course really big. You've got H&M, you've got Walmart China, and of course if Walmart China works out okay, then I don't know if that'll go over to the US. BYD, the car manufacturer, Shanghai E-Grid is of course another big company. Two of the companies I looked at in my analysis was BMW and Renault, because they are some of the the bigger groups that will be taking part in this. But of course you've got all of this other stuff as well, especially food and all sorts, and all of these companies are going to be utilizing the VTHO token. So the VTHO token, as I understand it, is going to be applied to a product. So if you have a packet of, say, tomatoes, you're going to have a code or a barcode that's going to be on the actual product itself, and that's going to be scanned, and that's going to be tied to a particular VTHO token. So with that, I then did a bit of analysis on that information. So what I tried to do is I wanted to do, well, initially what my plan was to prove whether Vechain can actually get to $2 or not, or what is the price valuation for Vechain in the future, say in 2, 3, maybe even 5 years. We've got a total supply of 86, circulating supply of 55. I know there was a hack, and that was 1.1 billion that was lost, so that should be taken off the total supply. I don't know if CoinMarketCap has already moved that or not, but basically that quantity was burned. And then I've got BMW 4 billion and Renault 3.5 billion that they would need to have in order to apply VTHO to all of the components that they use to manufacture a vehicle. Now, that's 4.61 and 4.04% of the total supply that currently exists, which is a huge amount of Vchain, or VET token. And how I worked that out was, and this is quite a crude calculation, I don't have exact figures around this. And I just started off with BMW Renault, and I was going to work my way down the list. But of course, as I started to do my calculations, things didn't make sense. So, as a general check online, I found it takes about 30,000 parts to make a BMW car. They've had 2.5 million cars sold in 2019. Because of COVID, I think the manufacture of cars this year is going to be less. So I just hazard a guess of 1.9 million cars. And then total parts required annually, and this, remember, is just for manufacturing new cars. They are continuing to manufacture spare parts and all of that stuff, so that figure is probably a lot higher for the maintenance of parts. And this is covering the full BMW group, so that's also including Mini and the electrification division as well. What I've done is it came up to about 57 billion for BMW and about 50 billion for Renault. I marked that down by 90% because the figures just wasn't making any sense to me. So basically I cut, say for example, BMW are making a new car. Maybe they don't want to track every single component. So say they only want to track 10% of their components using Vchain. That would equate to around 570 million parts annually. That would need to be tracked, and for that they would need 4 billion and 3.5 billion VET respectively, which is about 4%. So you're looking at about 8% just for those two companies. God knows how much some of these smaller companies would need, and they probably don't even have the funding to be able to afford that. I mean, Bayer would, because they're a pharmaceutical company, but places like H&M, New Balance, Nike, Walmart especially, they're not going to be able to, or would want to. Perhaps they might, but some of the smaller companies might not want to invest in buying 4 billion and 3.5 billion, especially if they got extremely high volume products. And as I understand it, Vchain is planned to be used across the board. So I didn't continue with that investigation. It needs higher VTHO generation. That's what I concluded. So my conclusions is that the VTO generation at the moment is far too low. The VTO generation per VET token, I believe, is 0.0004 VTHO is generated per VET token. And in order for this to make sense for these businesses to use Vchain, they need to increase the amount of VTHOs generated. So what I see happening is that the VTHO generation per VET token is going to increase. I would say as a reasonable amount would probably be 10 times the amount of what they're generating at the moment. I do remember that in one of the papers that Vechain released, that the generation rate for VTHO token can vary depending on market conditions. So as and when this token reaches critical mass, I think the VTHO generation is going to significantly increase from where it is at the moment. So in terms of staking rewards, you're going to be seeing a higher percentage return far beyond what we're currently getting at the moment. And if you think about the amount of staking rewards you get per VET token, would mean that the VET token itself will become more valuable inherently because you're getting more interest. Now, when they, or if they do change the VTHO generation rate, this may cause a sell-off of VET. So, for example, if BMW has 4 billion VET tokens and suddenly they're generating 10 times more VTHO tokens to be able to support their supply chain, they're not going to need the 4 billion Vchain tokens anymore. So they may decide to sell the VET back to the market, or what they might do is the surplus VTHO tokens that they're generating, they may sell that back to the market at the given rate. Bearing in mind that VTHO needs to stay at a low price. It doesn't make sense for VTHO to go incredibly high, and the same goes for VET as well. You don't want VET to be incredibly expensive, because that would be a massive barrier of entry to some of the smaller companies that would do want to use their platform. So although there might be a sell-off, there will be individuals on the sidelines ready to pick up more VET because they want to use their platform in order to be able to use Vtho to track their products. Not only them, but also retail investors and corporate investors may want to pick up some VET in the future to be able to assign VTHO. I can imagine quite far down in the future, maybe even 10 years down the line, there may be specialist companies that might actually just hold the VET, and they would just distribute VTHO to companies as and when they need them. They'll just be distributing there'll be a VTHO distributor, if you like, and they'll have a charge for that. Another route that they might use, and this had crossed my mind also, is there is nodes where you can, if you stake a certain amount of VET, you will get a bonus interest rate based on the amount that you've got staked. So at the moment, the minimum is 1 million VET, and you can get a strength node, which means you get an increase in the amount of VTHO you generate. I think another route they could take is they'll probably introduce new tiers, new lower tiers for VTHO generation. And that could be at 500,000, 20,000, 200,000, whatever it might be. I think they might introduce that to increase the amount of VTHO that's generated to be able to meet demand. So I hope that's been useful for you, and just in summary, so it makes it absolutely clear, VTHO price is going to remain low. There isn't, it might have peaks and troughs, but it isn't going to, be a token that's going to have a huge price associated to it. VET token may have a high price at some point, but I don't think it's going to be through the roof, because for the interest of the users, it doesn't make sense to have an expensive token for them to be able to use the platform. What I do think is going to happen is that the interest rate based on the amount of VTHOs generated from holding a VET token is going to increase significantly. And I think that is going to really be something that is going to increase your wealth by a huge margin. And from what I can tell at the moment, the VTHO generation is extremely low from where it needs to be, and I can see us moving much higher in terms of the staking rewards that you would get off Vechain. So that is entirely different perspective from what many other people might be talking about. I hope you found this video interesting. I might be completely wrong, so if there's anything you find with my stats or figures that might not quite make sense, please let me know. Maybe I can make another video correcting those. But this is what I found out today. And just one final thing is that this isn't financial advice, it's just my own opinion. Let me know what you think. Please like, subscribe, tick the bell for the next video that might come out. And thank you very much for watching. Thank you. See you later. Bye.